And good afternoon, everyone. Today, Bob Kudla, tradelikeagenius.com. Now, everywhere you look across the news, you just cannot look without seeing some sort of insanity in prices, inflation, policy crisis. We're going just crisis to crisis, as it seems right now, as I've heard it phrased. So, today's talk, it's going to be more like the energy and the policy crisis is now leading to a food crisis. I've been talking about that 8 months ago, saying there would be a fertilizer shortage that would dent yields. And now we have just the Ukraine and Russia thing already guaranteeing a minus 20% globally of wheat production. And then today wheat hit all-time record highs. So here to discuss, and then what we can look again, this energy and policy crisis has given us the food crisis, which will continue to amplify. Bob Kudla, we're going to share the screen right here. This is the wheat fund, and I'm ready to go because I want to pick Bob's brain on what trades they did. Markets are down, but they're still making money. And I just want to see what the magic is there, because if they were making money during this time, which is one of the most tumultuous times in the last umpteen years, definitely need to take a look at this. So Bob, welcome. The floor is yours.
Yeah, so Dave, I want to show you kind of how I trade, because people always ask me, why are you on the right side of the trades? How are you guys, managing this? So, we start with a macro view, obviously. So, we're a big believer. Obviously, you and I have been talking for years about food prices going up higher. Now we're seeing the culmination of that. And it's more than just climate change now. It's climate change plus policy error plus prolific governments. So, the only way you can beat inflation is you got to outrun inflation. So here's the wheat chart, wheat, W-E-A-T, right? So we just finished a trade on this. I'll show you the trade that we just did. But I just wanted to give you people a macro view here. This green line here is what we call our range trader, right? This will tell you whether you should be buying the dip or if you're counter trend trading. So if you notice here on wheat on the daily, we had a flip in February of 2022. The price of wheat, at least on the ETF, was at $7.74. Well, in that environment, the next thing we look at when you get a flip is you can buy the flip, but then you also want to see, we see this where it's green and black, the line. We have the green and black line are telling us the momentum indicator concurs with the change in our trend trader. So these are our two algorithms that you see right here, okay? Those are two of the three algorithms we have. So this is the range trader algorithm. Here's the momentum algorithm, and this is the heat algorithm. So the heat's telling us whether things are overbought or oversold. So we had the range telling us to buy, we had the momentum telling us to buy, and the heat was telling us just because something's overbought doesn't mean you don't want to own it. Okay, it means it's embedded. That means traders are desperate to get into the trade. And then we had a move on wheat in February from 772. And it went ahead and topped out here at 1270. Okay, so you take that trade and we run that trade until it falls out of overbought. So right here on March 8th, if you weren't already out of the trade by just doing good trade management, once it broke the momentum line and or broke the overbought line, you should have been out of that trade anywhere around March to 8th, March to 9th. And that trade there alone was a 50% move. You would have captured 30% move. Okay, you could buy a lot of bread for that kind of move on the trade. So now we're in a situation now where, okay, I took that trade, it held the range, but we still have the momentum was against us. Okay, there was a short opportunity to go long here. That trade did not work, Dave. Okay, and it came back down and tested the bottom again. Okay, we got another buy signal. This trade worked. Okay, so this was another trade. Then it came back down on the dip, and this is the last trade we took on this. We went ahead and bought it when it got just close to $11, and we closed it today at $12. So I'm just going to show people these three trades, what you would have made on the trade. This is just trading wheat, an ETF. So you would have bought that trade when it had the range flip and this flip. You would have got it on this day here. And you would have closed the trade out on this day here. You would have made 45% on your money. Okay, this next trade here, you would have bought this day and you would immediately got taken out this day. You would have lost 5% on that trade. All right, this trade here set up again. Okay, you got the buy signal here. You'd have bought this day here. You would have got up to here, and you would have got out of this trade right here. Okay, that's a 5% gain. And then the last trade that just hit here, it bounced. We got in right about here, and we had a stop. We had a stop set, so we were rolling a stop up to $12, and we got out right about. That's close enough. A 10% gain. Okay, technically the signal still said you could be in the trade, but I move stops up as we go along. So here's 4 trades in the last month and a half: up 45, down 5, up 6, up 10. That's pretty damn good. And so that's kind of how we stay with it. And we love this trade. And we're not done with this trade yet. So the next trade that we're in, we're still in it right now, is we're in corn.
Yeah, personal opinion, corn is going to be the granddaddy grand slam home run this year. The amount of corn I'm looking at, Ohio's only at 3% planted, and this should be in the high 60s, low 70% planted. And I'm seeing this, just unbelievable deviations from the norm on something in North Dakota as well. There's somewhere around 3 or 4%. This should be up around 70%. So there's a lot of corn not going to go in the ground this year, and exports are not coming. So think about the products going into corn, and this will really make you think, wow, this is this is one of the biggest possibilities here this year to run on corn, in my opinion.
Yep. And so you want to buy the CORN, the Tocrium Corn Fund. Okay. And look at these moves on here. So the trade gave you a trade signal to buy here. Okay. And that trade would have worked about here, a 20% trade. Okay. So you had another trade here. All right. Depending on how your stops work, that same trade was a dippy do. That trade would have lost, but not as much. And then here's the next trade. Okay. It hit very next day to here. You came up to here. Okay. And the trade came to here to make 6%. And I just got back into corn again right here. So I'm still in the trade, Dave. Okay. All right. My stop is down here. Well, that trade's still live. But my initial stop when I put a trade on like this, I always put my initial stop at this what's called the buy to dip line, and then I move it up every day. Okay, but if you're a mechanical trader, you could use the heat indicators and you could use the momentum indicators. So this is how we keep people in the trade. You see this light blue line here? This is the bull bear line. So if stock's trading below this line, you never want to buy it at all. Okay, there's many things that are above the line, and so so that's corn and that's wheat. The trade that we made the most money on last year was MOS. I mean, this thing was sick.
And you mentioned before last month that you thought it was going to be dropping.
And it did. I remember I said to you, it's going to drop into summer. So it dropped. Look, see, we went from the green is good to pink is bad area. This is supposed to be red, but the way they do their colors. So we're not ready to buy fertilizer just yet. Okay. So you see how that did that? And then also, TradingView gives you these nice things called a rising wedge. Rising wedge usually fall down. So I'm patiently waiting to get back into my mosaic trade again. Now, this pink line, you don't get in the trade, but if it comes down to here and I get a buy signal, I'm jumping on that trade. But here, that's mosaic, which is potash. Here is the nitrogen producer, CVR Partners. This pays a 15% dividend, Dave. Look at the dividend they paid on this thing. The guy paid $2.26. The time before, you're looking at a $10 dividend, right, on this stock. And this thing's been driving up. But again, the same thing. See, fertilizer peaks in the spring, falls in the summer, and it peaks again going into the next year when they have to buy fertilizer again. All right. So fertilizer, we're patiently waiting on. But this company here is very interesting to me. If it comes down to here, I'm interested because of that dividend is really, really sweet. Okay. And then you look at the energy names, companies like CLR.
Hey, Bob, can I ask a crazy question here? When you're talking dividend, how long do they require you to hold that before they're going to pay out on your dividend?
So they have what's called an ex-dividend date. You have to be the holder of the shares to that date. And the dividend is usually paid maybe a week or 2 or 3 afterwards, but you don't have to hold the shares after the dividend date. Okay, you can just take your dividend. Okay, and you can be out of the shares. So you have to hold through the ex-dividend date, Dave.
Mm-hmm.
Okay. So here's another one. Here's an energy stock. People say, "Oh, the market's crashing 40%." This thing's just been grinding up now for the last 2 months. Again, use the same process. You get your buy signal, turns green. You take your trade. You take your 4 or 5%. Comes back down. Comes back over again. You take your 4 to 5%. You get out. Comes back down. Breaks again. Take your 4 to 5%. You get out. Breaks down. You do it again. You take your 4 to 5%. Get out. I mean, this is not complicated stuff, Dave. You just have to be on the right side of the trade, and you're basically trading the momentum, okay? And it's all you need to do. That's all you need to worry about. And then here's a reversal. So look at this is Datadog, right? This is one of the tech companies. You know, do you want to own that? No, but if you know how to trade futures, trade options, buy puts here, okay? Every time it goes pink and goes down, buy puts. You know, oh, red, pink, buy puts, red, pink, buy puts, red, pink, buy puts. This is no-brainer stuff. And you just keep doing this trade, you keep playing this trade, you keep taking this trade. And so if you want to short things that are going down, you buy puts when it hits these resistance areas here, okay, or it rolls over a momentum, and you buy when it's green and it's going up higher. Today we got buy signals on some of the shippers, and look at this year nav, and look at the dividends these guys pay. This one they pay on annual, but this is 3 cents, but they do these annual dividends of $1 and stuff like that. So this is great. Here's an Israeli company called Zim. All right, look at this last dividend that they paid. $17, Dave, they paid on their dividend. All right, so look at this. Green, 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 boom. Okay, paid a dividend, drop back down. All right, so you're still pink here. It breaks back over 71.72 again. Right, you flip it to green, buy the dip, go. And we teach people how to do this, Dave. We literally have 20 courses as part of the service. You pay for an annual subscription to the service. You get access to the training videos. We teach you how to use all this stuff. And then in addition to that, we put trades out every day. And in addition to that, you have access to a chat room. So that's kind of how we do things. So for us right now, we're definitely into food. And I'm talking about the general grains. So there's one more out there, of course, as you know, soybeans. Okay, look at soybeans doing the same thing. Right. Look, and these aren't like get rich quick, Kathy kind of trades here. Soybeans up 22 to 29. That's still 15% a year. If you ask everybody out there now, would they rather be down 30% in their 401ks or up 15% for their 401k? They'll tell you they'd rather be up. And something as boring as this. All right.
Now, speaking of boring, do they have a sunflower fund, a sunflower oil fund? Because I'm seeing there's minus 50%, or literally half the world's sunflower oil will not be available this year.
Yeah, well, that's because 30% of it comes from the Ukraine.
Yeah.
So, yeah. So here's Kroger. Okay, look at Kroger. Here's the food stock. Food stocks finally went today. You know why? Walmart, Amazon, Costco, and Target just got blown up. But this was a safety trade that people took. Look, you'd have took that trade and see right here, you would have got out of the trade right here, okay? And then it comes back down. Oh, I got a green, I better buy. You buy, and guess what? It broke it today. Usually been out yesterday. All right, this is what protects you. So now you got to wait for these trades to set back up again. All right? So if we were 100% Dave, we'd be called collecting, not trading, okay? So you play the average as we win 2 out of 3 trades. Our profit factor is positive, which means over time, trading this system is going to make you money.
There's a lot of mechanics working with this. And I was really surprised that Walmart missed the earnings. Is it because there wasn't enough good arriving from China, or what are you seeing? Because you just, referenced that Kroger got blown out. And what's the reason for that? Because the way you would look at it just on Ascend, you think, oh, the prices are rising in all the stores, everything's more expensive. They should have made record amounts of money, but not this month. When do you think those real profits are coming in?
It works till it works. It works till it doesn't work. So if they can get inventory in, cheaper and sell it higher later, that's the inflation trade that works. But what happens is that you can raise prices all you want, but people don't buy it. You have a sale volume collapse, and that's what happened. So all those
Hmm.
had sales volume collapses. So, and see, and I don't care. I mean, I care. Obviously on a personal level, but from a trading standpoint, I don't care because if it's flashing red to me or pink, I'm not buying it. But if it's green and I get a green, I'm taking it. And so I don't care the whys and wherefores. I'm assuming that there's enough institutional interest in that stock that I can make money on the trade, and that's all I care about. Now, obviously, from a macro standpoint, you want to make sure you're in the right place at the right time. So, tech is bad, food is good, right? And oil's good, energy's good, and things that use energy is bad. So, I mean, I feel like a 2-year old, but that's how you have to think of this stuff. People overthink it. So I get the macro right. I understand my probabilities correctly. And then I trade the range, I trade the momentum, and that's it. And we teach people how to use all that stuff. It's no black magic. You use our service, you get access to these algorithms, you get access to our indicators, and you get access to our training, and you get access to us via the chat rooms. And we run specials, Dave. So 65% off anything bundled for your listeners till Saturday. Anything not bundled, they can use promo code Memorial and pick and choose what they want. But what we charge for service is nothing to what you get out of it. What people made on the wheat trade paid more than a year of our service. So we make it affordable. We want you to win. We win when you win. You stay with us a long time, and I have a successful business.
Yeah. So let me ask you, diesel is the talk on the street right now. So if there are diesel shortages that do indeed hit, because it's North Carolina, South Carolina that's starting to get squeezed here, which is one state over from where we are. It's far from where you're at in California. So if diesel does continue to roll from the East Coast area here out and does have some sort of effect across the wider United States, then what kind of plays are you setting up for things diesel related?
There's no diesel company that I can necessarily pick, but there's a propane shortage, and so I'm in suburban propane. So that's how I'm playing it. They're similar. It's just that the what's happening now is uh, the refining capacity is been limited, and so and propane and diesel affect farmers, so they're going to put less wheat and corn in the ground. So wheat and corn are going to continue to grow in price, and all that stuff's going to just blossom out through. I'd be looking to short some of the restaurants going into the fall and stuff like that. So, diesel itself, I'd have to kind of study it. I've noticed it, but these refining constraints find a way of getting fixed sooner than later. So, but propane, I've been in a propane trade now since January, and it pays 8.5%, 8.8% dividends. So I just stuck it in my IRA and walked away from it. So that's kind of how I'm playing it. You could buy the big oil companies, integrated guys, because what they lose in refining, they make in drilling. What they lose in drilling, they make in refinery. Or you can just buy a refinery. Valero is probably a good trade you can get into because their crack spreads are probably off the charts good right now.
Yeah, but then the blunder of the policies of trying to scalp those companies because they're making record profits. But I don't hear about politicians screaming on the megaphone about scalping pharmaceutical companies because they're making record profits. I mean, what's it going to come to when food's record price in the stores? Think politicians are going to help us move through this and scream, "Oh no, all these food producers need to pay us," and whatever that bill that what they were trying to pass to stop, or tax record profits. I mean, where does that go? It doesn't help the consumer in any way, shape, or form, because I'm really looking at it now. There is a literal shortage in almost every possible commodity, goods, service, and that would include labor and everything else. So, moving through this forced change that we're seeing with the purposeful turn off of the gears and the levers of the delivery system and things, energy and food, then you're going to have to take the ball into your own court and run with it. And you're really going to have to be proactive here to get through this change, because, inflation is not coming, it's here. And I hear people complain about it in the stores every time I go in.
Yeah, and this inflation's a tax. So it's like the 70s in the sense that these prices are going up. It's unlike the 70s that prices wages aren't keeping up with the pricing pressure. So it's eventually going to collapse in on itself. And so we're going to flip from basically an inflation environment to a deflation environment very quickly. But I coined this a long time ago. I called this inflationary depression, where prices keep going up, but your ability to afford it falls away. And this is a very unique time period. I don't think we've had this environment where basically the prices are moving, the inflation is moving at such a rapid rate in what I would call Main Street, with Wall Street falling at such a rate and the policymakers fighting against you at the same time. So I think we're in a fairly unique environment that's a little bit kind of similar to, 1929 rolled up to 1970, rolled up into the year 2000 kind of a move, so it's a bit of a mixed bag, but we're in unprecedented waters, sir. I mean, prices could fall by half just to get us back to normal in terms of the stock market. So be careful. So buy green, sell pink. Simple as that to us.
Yeah, and it does seem like history is repeating. And I was wondering, are there some chapters of history and economics that we can go further back and find a chapter from history that might not be well known, was something that played out pretty much in this same way? I mean, everybody references the tulip bubble and crypto and, types of economic events, which I talk about the grand solar minimum related to population migration and food price increases on 400-year cycles. But, tracing those back in history, there's a lot of correlation to what's happening today.
Yeah, South Sea bubble is probably pretty close, where it was kind of like the everything bubble then too, rolled into a grand solar minimum. Look, but there's always opportunities here. It does me no good just to agonize. So,
it's the greatest opportunity in human history, Bob. I hate to cut you off, but it is. This is the biggest opportunity in human history ever, really at our fingertips right now. So if you can actuate and pounce on that, there's, the interconnectivity and the way you can do things from home, and the trades that you can put out, or you can watch the news, or you can really pinpoint in on an industry or service area. I mean, so much opportunity. I mean, you can stay in the fear, understand it, but just understand the problem and then look for the opportunity, because Wei Ji is the Chinese word for Ji Hui, which is opportunity and danger.
Yeah, well, look at decentralized growing is going to be huge. So, in fact, that's one thing that we're looking at personally, is seeing where, I'm going to start doing the financial analysis on I hate to use the word greenhouse because it won't be greenhouse. It'll be basically internal lights kind of growing. And so it'll be all LED lights, but you have to get the land cheap enough. And so, and then you have to grow the right mix of crops, because even LED lights sometimes aren't cheap enough for certain crops. But I guarantee you, if we have a grain shortage, you'll see in the next 5 years, you're going to see a lot of grain being grown under the lights, enough to sprout to give directly to the animals without waiting 90 days to feed them. So what the farmers did in China, they'll be rolling out sprouted grains every 2 weeks for the cattle. And I think you'll see more and more of that. And, and less reliance on just the vagaries of.
Bob, you need to have the grain to sprout. So to take that, you're going to have to bring it to some sort of maturation to be able to get the yield to then even get the seed to then sprout and bring it out. So we get in this loop, and I'm really wondering, if they could push the technology to the Uber, would there be enough space? Would there be enough electricity when we run into the same kind of conundrums again? They want to move to a full electric fleet, but we don't have enough electrical generation to power every vehicle in the United States if we did such a thing. And would there be enough power for a full LED growth to substitute our field crops and our greenhouse crops and garden crops and all the lettuces and everything? In California, how much is grown out there? Could you even substitute what's grown in California using mechanized LED systems? I don't know. That's a huge draw for my, maybe it's just a novice opinion on that.
Incremental. So if you could move 5% out of the fields and into these greenhouses, that's a huge, huge gain. And the reason why I'm not talking greenhouses is because you don't need the glass. You can have glass on one half and solar panels on the other half. So, and in fact, Germany created see-through solar panels already. So there's a lot of things that can be done. But look, a lot of people want to boil the ocean. They want to solve the problem from 1 to 100. That's Biden administration's problem, because they're zealots. They want to go from 1 to 100 You can't get here from there. But you know what? I put solar on my house 15 years ago. I have rain barrel water. I've been growing out my garden 10% more every year. So I'm an incremental guy. You got to keep driving. Now I'm looking at it and saying, hey, for my wife and I said, do we start a business and start growing this stuff? Because look, I understand that people don't know this about me, but for years I grew poinsettias and I sold them. I brokered orchids to sell into the greenhouses. So I understand how all this stuff works. And do I want to do it? No, I'll find somebody that will manage it from an operation standpoint. I'll work this. My strength is basically sales and communication, but I'm also a consumer of technology, and I can see where this hockey puck is going. Tremendous up. You don't need a lot of money. I bootleg both those companies up for less than $5,000. I started Trade Genius for less than $5,000. You started your business for less than $5,000. You got to work your way in and just drive forward. So you just keep pushing, and you just keep growing it out, and using your own personal sweat equity to drive this. What's more satisfying? You grow something that people want, you develop relationships on the way, and then you're not working anymore. And like, hey, I'm making money, I'm paying my family. And I'm not talking, look, you're talking microgreens, you're talking salads. I think you're going to see the sprouted grains. I guarantee you'll see the sprouted grains out there in marginal land where, you can't do this or that. But you know what? You can pump, I know they're doing it a lot in England now. They're doing a lot of sprouted grain feeding to cattle. And I know they're doing it up in Montana to supplement in the wintertime. Tremendous opportunities out there. So I'll help you make the money that you can go ahead and do other things with it. How's that?
Yeah, I think designing edible landscapes for families who want to produce food in their local home that don't know how, with companion planting and having the entire yard as they walk through in different levels of food production and the different times of the year as well, depending on the climate, obviously. But that's going to be a huge one too. And then getting the software that rolls that out. I've talked with a couple of people who actually are moving in on that. So again, it is software based, and then regional based, grow zone based, but it is sweat equity putting that out.
Yep.
Showing proof of concept, and then copy paste. But that is going to be a $billion, multi-billion-dollar industry, is getting people. Because I was reading about the victory gardens here in World War II. 40% of all food produced from 1941 and 1945 was produced in our own backyards, in cities here in America. So even if it reaches half of that, or even gets back to 40% again, that's not one company doing that. That's a multitude of different companies intersecting there to provide that service.
Yep. Decentralized growing. Look, I have potatoes and pumpkins and zucchini and squash in my backyard. So you got to swap out what carbs you're going to be able to eat too. So, and look, if you guys I say the biggest investment you can make is get a freezer and get a bread machine, so that you can, look, you got to undercut the retail here so you can make things happen. Check us out at tradelikeagenius.com. We got specials running. I think you'll like them. The way we price for our services, 65% off. Standalone, use promo code Memorial, 40% off.
I'll put that link in the description box below so you can click and go.
Yeah, and just always opportunities, guys. Never fret. Always move forward.
See, we're here. There's 8 billion people still here after all these cataclysms on Earth. So this is just another one that we're going to move through, a bottleneck of sorts for economy and food production. But again, look at the other side on the opportunity. And as we squeeze through this and get popped out the other side, there's going to be more millionaires made than there were during the Great Depression times 100. This is it. Truly, if you're looking for some hope in the message of everything we're experiencing, it truly is. You can take your own life and your own destiny right now and move with it in a different way that you never thought possible, because we are in times that were never thought possible. So Bob, I appreciate you joining me and sharing a little knowledge, because I'm always trying to learn how the economy is going to move in this.
No, thanks, Dave. I really appreciate it. I'll talk to you next month.
Okay. Bye for now.
Bye-bye.